pointing to some sort of massive credit downturn, at least not they can get into consumer prices more quickly.
To Tuesday.
Gas prices.
Big markets,
2004 peak for the second time. The other time before that was Russia's invasion.
8:30 will be high impact news here. Durable goods.
From a lot of companies. Next up, we've got Delta coming out tomorrow. Coming up next hour, Katrina Dudley of Franklin Templeton, Daryl Kroc of Wells Fargo, New York Fed President John Williams. Do not miss that with our own Michael McKee and David Seif of Nomura. This is Bloomberg Surveillance. Good morning.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world. And I thought, okay, I can rise up. I can play this game. And I did play the game.
It was great and it was depressing and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, and fashion icons. I'm often asking about the news of the moment, but I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers run, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Thousands of American Marines are heading to the Middle East.
Not participating. Very good chance we're going to end up in a deal.
People are going to put boots on the ground.
This is going to be a short-term excursion.
Brought to Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
To the minute reporting.
Their report has been hit.
Since we struck the U.S. Embassy.
And the analysis you
The
need.
United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Equities are really looking for hope, for resolution.
Panic buying more than panic selling.
The underlying shift in the US and a reversal of last year's trade makes a lot of sense here. We expect volatility to continue.
In the 6-month window, I can see a lot of volatility.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the third hour of Bloomberg Surveillance. Optimism fading as traders keep an eye on tonight's deadline for a deal with Iran. Reports of explosions on Kark Island keeping risk appetite at bay, but not extinguished. A dissonance developing between calm risk markets, open capital markets, and increasingly, Danny, jittery commodity strategists.
I was just looking at the performance of the major asset classes since this war broke out. Some of it is extremely volatile. Oil up more than 50%, depending on what contract you're looking at. 10-year yields up 38 basis points, which is the biggest since Russia's invasion of Ukraine. Stocks are down less than 4%. And in fact, they've erased half of their decline to the most extreme of the extent. So you are seeing this disconnect. To your point, it is dissonance between what oil markets are pricing and what other risk assets are pricing.
And when last week we saw a little bit of a reprieve from some of the most extreme
stops were indeed spared. We haven't seen the US move into that point quite yet. So it's going to be something to watch and develop because Lisa, as you well know, President Trump said that today it depends on what Iran does, whether or not the US is going to wind down rather, or escalate its operations later tonight.
Tyler, do you have any sense of what the deliberative body is behind any decision that the United States makes? Who's involved? Exactly how much disagreement or agreement there is in these deliberations that are ongoing?
Well, at least publicly, Lisa, we've seen a united front from the administration, right? We are expecting some updates later today from Secretary Pete Hegseth, also the Joint Chiefs of Staff, Dan Kane. We know Secretary Marco Rubio has also been closely involved in all of these discussions. There has been reporting that President Trump has pushed for a perhaps more aggressive stance when it comes to this, considering that we know some of his previous comments going back decades when it comes to his feelings on taking McCarg Island as just one example. At this point, though, if the administration has put out their negotiating team yesterday, President Trump confirming that includes Vice President J.D. Vance, along with, of course, his special envoy, Steve Witkoff, and also Jared Kushner, many of whom these officials were in the room with him yesterday in the briefing room, of course, also the CIA director as well. So there seems to be a lot of different angles here, but even Lisa, yesterday, I'll point out during those remarks to reporters, President Trump himself said that sometimes there has been disagreement with the strategy when it comes to Iran among top military officials, but as of now, they are showing, of course, nights.
Heather Kendall, thank you so much for that work and for coming on so quickly. Really, honestly, Danny, looking at this, how does anyone take this type of post? A question of, yes, this is amping up the rhetoric, but saying a whole civilization will die tonight, never to be brought again. I don't want that to happen, but it probably will.
But then at the same time, saying that we have complete and total regime shift, we have smarter, different, and less radicalized minds, and pointing to optimism that maybe there will be a deal. It's something that General Robert Walsh of Academy Securities pointed to, of a carrot and stick approach from the president, that maybe there's a method behind the mixed messaging, that you claim there's a good chance of a deal, and that's deliberate to allow for a last minute deal, that you have to have that present in there while leaving the extreme of the threats. Again, though, the issue for Marcus is this kind of takes off the table, or seemingly at least takes off the table, any kind of walk back.
Yeah, in the markets, what do people do with this? Unclear. You are seeing a little bit of a leg lower in equity futures on the heels of this. Up next, the morning calls plus Daryl Kronk of Wells Fargo as President Trump's threats weigh on markets. That's coming up next. This is Bloomberg Surveillance.
Middle East and Africa, vibrant resources and high yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets,
From the micro to the macro,
covering retail, entertainment, the business of sports.
the supply chains, trade policies, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld,
And I'm Romain Bostic, and this is The Close.
live every weekday.
Only on Bloomberg. Context changes everything.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insights with Haslinda Ahmed. Only on Bloomberg. It is deadline day. There's a question of what happens after 8 p.m. Eastern. A drumbeat of headlines have been taking this market lower throughout the morning. Explosions are reported on Carg Island, then reportedly the U.S. hitting a number of military-tied assets on Carg Island. And now President Trump coming out with a post saying a whole civilization will die tonight. I don't want that to happen, but it probably will. As these sort of drumbeat of headlines comes out, a sense of unease falls over the markets, and you do see that reflected in a risk-off feel. You're seeing stocks lower by 0.6% in the S&P futures. You're seeing a greater decline across the board. With Russell and NASDAQ down about 0.8% in the bond space, yields slightly higher on the back of an increase in oil prices, particularly at the long end of the yield curve, which is interesting, given the expectation that the Fed could potentially move to a more hawkish position in the oil futures space. The June contract for both Brent and WTI, both inflecting up more than 1%. Seeing now WTI, that June contract at near $100 a barrel. We are going to get back to that post that we got from President Trump and what the ramifications of that 8 p.m. deadline are later today. Time now, though, for the morning calls. First up, Piper Sandler lowering his price target in Apollo to $146, noting a difficult start to 2026 with macro headwinds. Those shares lower by more than 1%. Next up, Seaport Research double downgrading Lennar to sell from buy, seeing rising concern of further slowing in housing activity on the heels of higher mortgage rates, slowing down further an already rather sluggish industry. And finally, Morgan Stanley downgrading ARM Holdings to equal weight, noting plans to sell its own chips could pose risks. Those shares lower by more than 4%. Turning back to our top story, stocks falling and oil rising following an ominous threat from President Donald Trump on Truth Social. The president writing a whole civilization will die tonight. I don't want that to happen, but it probably will. Daryl Kroc of Wells Fargo joins us now. Typically, markets try to strip out emotion. They try to look at what the facts are on the ground. How do you handle headlines that increasingly have the potential to be potentially history making, but also could be nothing and could be a viable dip? I mean, how do you sort of assess this type of risk?
Yeah, I think it's a great question, Lisa. It is the question of the day. So good morning. I think what you want to look for in this kind of environment is what we call high convexity trades. And what do I mean by that? I mean trades that probably have some minimal downside to them, but could have big upside if the circumstances and the conditions flip. That's part of the reason we just did a Paris trade of downgrading energy and upgrading technology, because we see the asymmetry there of the risk reward being very, very favorable in today's world.
At the same time, Daryl, how do you understand what's a haven at a time when potentially we could be looking at something that's either a massive inflationary shock or potentially a massive hit to growth, as not just a question of prices kill some of the activity that people are opting to go on, but actual shortages percolate into some of the fastest growing areas in the world?
Yeah, Lisa, it's a great point. I mean, I think what you end up with is you have the real supply demand shortage that's probably going to persist for quite some time. That's well documented and well said around oil. But if I look at something like what I was just referencing, I've got energy equities up 33%, tech down 7%, a differential of 40. Well documented that tech now trades at the S&P forward 12-month price earnings multiple. So I'm paying no premium for double the earnings growth, right? The consensus 12 months forward on the S&P is 18% earnings growth. Tech is supposed to grow 35%. And history tells you, if you go back and look at these past oil shocks, you want to sell energy equities in advance of an oil price peak. I can't tell you exactly where the oil price peak is, but at $114 on WTI today, we'll take that risk reward that you can deploy capital and sell into that environment. History tells you when oil becomes the story is when you generally want to move away from energy equities.
It feels contrarian at this moment, Daryl, with everyone upgrading their earnings outlooks for energy and everyone saying this is the place you can hide out. So it's interesting to hear that. And does it also mean then so much has been made of the halo trade, the hard assets, low obsolescence? Have we gone a little too far down that path then? Is that overblown the attractiveness of away from digital assets and into the hard assets?
I think so. Again, go back to the high convexity. So when we look at areas where, again, go back to the high convexity. So when we look at areas where, you know, the downside is probably somewhat muted, but the upside could be real if that positioning to your point changes. Annie, it's places like I just mentioned, you know, energy versus tech. Gold, I think, is another high convexity trade here, right? Probably minimal downside from 46.80. But to us, we have a 12-month gold target price at 5,900. That's 25% from today's level. I would put financials in that category too. You know, financial equities are down 9%. If you look at some of the alt managers, down 30 to 50%. You know, a lot of the bad news is priced in there. If things do change, even on the intermediate basis and move higher, you've got some big upside there probably. And you could put digital assets in there as well. Digital assets have come down meaningfully, call it 50% in value. I don't think the downside is materially more there, Danny. And so, you know, if the world does change and conditions change and positioning is skewed one way, people have to reorient that positioning. They're covering short positions or getting back long areas so that convexity can really work in your favor in portfolios when you use it wisely.
Daryl Prock, Wells Fargo, thank you so much for being with us as we try to parse through what is noise, what is signal. We're getting a series of headlines. Not only President Trump's Truth Social post talking about the potential carnage that could occur tonight after 8 p.m., but J.D. Vance speaking in Budapest as he delivers a speech there saying that the U.S. is confident it will get an Iranian response, reiterating that the deadline is 8 p.m., saying that the Karg Island explosions and reported military-focused strikes does not represent a change in strategy. All of this coming as the pressure continues to rise.
I do wonder also, they're certainly not outright saying this, but if in here it might be a slight shifting of the goalposts. That J.D. Vance is saying we are confident we'll get a response. He's not saying what the response will be, that it will be an agreement to a ceasefire. But is that enough for the U.S. to say negotiations are ongoing? Therefore, we're not going through with the wipeout of a civilization that the president talked about in his Truth Social post. Is that what's going on at the moment? It's so hard to know with these headlines coming very fast. And again, very extreme rhetoric coming from this president.
If you are just joining us, setting up for this morning, the expectation was that there would be ongoing discussions until 8 p.m. Eastern this evening, a tone of optimism initially that has faded as reports of strikes on Karg Island continue to come out. The latest coming from the Wall Street Journal saying that the U.S. striked more than 50 military targets on Karg Island, talking about two officials that they spoke to about that. Then J.D. Vance saying that there is going to be no change in strategy, that what you saw in Karg Island was not a change in strategy. And then this post from President Trump, a whole civilization will die tonight. I don't want that to happen, but it probably will. Full of mixed messages. Nonetheless, amping up the rhetoric at the very least, with a market struggling to know what to do with this.
And the vice president also saying on Iran that very shortly this war will conclude. A similar rhetoric we've heard from the president too, at least on the equity side of things, is one that has continued to look at the bright side. Again, will a deadline of 8 p.m. tonight change that?
Yeah, right now you are seeing a bit of a fading of some of the risk appetite. Equity futures have rolled over and are near session lows as we get these competing headlines dripping out through the day. The real underperformance has come from the Russell 2000, with yields going higher on the heels of higher oil prices. Do not miss what is coming up next. New York Fed President John Williams joining our own Michael McKee as inflation concerns weigh on the path ahead for interest rates. How does a Federal Reserve deal with potentially a two-sided risk? This is Bloomberg Surveillance.
We will be back for the open.